Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we will help you understand all the closing action of the stock markets, the way the trade panned out throughout the trading session, and what can you really expect going forward from here. First up, a quick check on how the benchmark indices are performing at this point in time. Well, it's been a down day so far, a very volatile trading session, and towards the end of the session, we are actually seeing both the benchmarks seeing sharper cuts from the early morning trades. There's a 0.3-0.4% of a cut, which we are looking at to close in with 18,028 for the Nifty, down about 80 odd points. And talk about the Sensex, 60,626. That's the level at which the Sensex is trading at, down about 235 odd points right here. The mid and the small caps are also seeing sharper falls, in fact more pressure right here, underperforming the benchmarks, especially with the mid caps declining by 0.7%, 217 points gone there for the Nifty mid cap 100 index. Also the small cap 100 index down by about half odd percent. But there are some bright spots in the markets when you talk about the sectors. The Nifty Bank, for example, is still looking at gains of about 0.4% odd, and that is perhaps one index that's been rising the most in today's sectoral indices move. And all the parameters, talk about the financial services, the private banks and the PSU banks, they're all pushing the Nifty Bank higher in trade today. But where are the declines really coming in from? You can talk about the media stocks that are down in trade, the IT stocks that are also seeing some kind of cuts. FMCG on your screens down by almost 1 odd percent. That's the pressure point. IT stocks have declined now. Pharma stocks down by 0.7%. So FMCG, Pharma, IT, all three defensive packs in the declining trend today. The realty pack also seeing cuts of about 0.7%. The autos also moving in the slower lane by 0.6% odd. Metals losing their sheen completely, 0.8% of a decline. Most of these indices are now trading at the lowest point of the day. In terms of the advanced decline ratio, you do have more declines at this point. 38 stocks in the Nifty 50 pack in the red versus 11 movers on the upside right here on the advancing side as well. Talk about the other movers and shakers at this point in time in terms of the top losers performance. You know, you can actually see where the pressure is coming in from. It's HUL clearly down by 4%, and that's after the earnings. Although the earnings were not that bad, but what created this kind of a nervousness among the shareholders was HUL's increasing of the royalty payment to parent Unilever, and that's by 80 basis points to 3.45%, and that's what's created some kind of a nervousness, and investors are worried about losing their share on the EPS front and giving that away to the parent as well. HDFC Life is down, Asian Paints declining, continuing for the second consecutive day after the earnings. Nestle down in trend, 2.3% odd. JSW Steel also under pressure. The gainers on the top side, you do have Coal India, HDFC Twins still looking at a gain on the upside with 1.5% odd. Power Grid, Tata Motors, these are the stocks that are still holding up into the green despite the overall muted trend that you're looking at in terms of the markets. But what we're looking forward to is one stock for sure, the largest listed company in terms of the market value, Reliance Industries, and that is going to be in focus right ahead of its earnings, down by 1.2% odd at 24.42. There's some cautiousness that you can see. We do expect Reliance Industries to post its earnings this evening after the market hours, and towards the end of the session you can see a declining trend. There is still nervousness that the investors are facing right here, but what can you really expect from the earnings, and how are the stocks likely to react post the earnings as well? That also is something that we will discuss. Well, overall, if you see that there is cautiousness, but overall, when we've seen historically the stock ahead of earnings in the last 19 quarters, RIL has been in the negative zone in the 9 instances, falling about 1 to 2%, and that's something of a similar trend that you're witnessing right now. In terms of the expectations, there are a whole host of expectations when you come onto several segments, from oil and gas to petchem, refining, oil to chemicals business, the retail business, the telecom business, geo, the whole host of expectations right there. So let's start off by the 5 key things that the investors in the street will be watching out for. First, on the basis of the revenue and PAT. Now, the core earnings for the December quarter is expected to be better than the September quarter as per the street, due to improvement in the mainstay energy business per se, and that will be coupled by the steady performance of the telecom and the retail verticals, and that's what the expectation of analysts is. The consolidated net profit is actually expected to rise about 12% on a sequential basis, but here's a sharp fall on a year-on-year basis. There could be a sharp fall or a decline of 17 odd percent, so watch out for that. Revenue again likely to increase by 17% on year to 2.23 lakh crore rupees, but sequentially there could be a fall of 4% as per the street estimates. On the oil to chemicals performance, higher gross refining margin and gas prices and lower impact of the windfall gains tax is likely to really help this vertical's performance improve sequential basis on a Q-on-Q basis. We do have Nuvama Institutional Equities which has expected Reliance Industries oil and gas operating profit to rise by 62% year on year and 4% on a sequential basis on a higher volume, and further aided by the higher deep water gas prices as well. There's Prabhudas Leeladhar estimates flashing on your screen, so you can keep an eye out on that too. In terms of the scorecard, when you talk about the Jio performance right there, the front runner right now for Reliance Industries, the subscriber additions for Infocom are expected to be decent, although slightly lesser than the second quarter is as per most of the expectations, especially for BOFA Securities, Bank of America Securities, that has estimated a net subscriber addition of 5 million compared to 7 million that were added in Q2. Morgan Stanley expects a similar number to that of Q2, that's 7 million right there. On the average revenue per user base, that's likely to have improved 1% sequentially, given the delay in the tariff hikes, and the outlook on the tariff hikes in the coming quarter will also be very closely watched by the street and the investors as well, and also the analysts. So that's something that you should keep an eye out on. On the retail front, of course, most of the analysts have built in a double-digit growth in revenue and operating profit for the business on the back of increased store footprint, improvement in footfalls, and benefits of the operating leverage. But one would definitely want to hear more on the recent announcements on the FMCG foray by the company and several of acquisitions, especially on the fizzy drinks and those companies as well, and how the company, how the group really wants to expand on that front and compete with the already big soft drink giants present in the market, including Coca-Cola, Pepsi. So that's something that one needs to watch out for. The most recent buyout was Lotus Chocolate, so any update on those fronts or any more acquisitions will definitely be eyed. Apart from this, remember that the company will be also looking, the investors will be looking for announcements on new energy and Jio financial business too. Reliance Industries had announced plans to demerge its financial services business and also to list Jio Financial Services on the bourses. The company did not share any detailed plan of the business, so the street will definitely be looking forward to that one as well. And Jio Financial could be a key catalyst for the stock performance in 2023 if something like that happens. So that's something that the investors will be keenly looking out at as well. So that's the entire sum up of what we can really expect from the company going forward. The stock is still subdued by 1.13%, 2,444, the current levels down by about 27-28 rupees in today's trading session. But that's how large trend has emerged over the last historic 19 quarters. 9 quarters have seen the stock really falling below before the results came out, but all depends in the evening. All eyes will be on that, but definitely stay tuned on to Business Today TV to catch all the updates on what the results look like and how should you be really approaching the stock amid these earnings as well. And with that, we wrap up this edition. Don't forget to subscribe to our channel and also stay in touch with us and engage with us via our other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.
They are the top movers.